Let me ask you something. What if the only difference between you and financial freedom is a simple roadmap you were never shown? Not intelligence, not luck, not a six-figure salary, just a clear path. Because most beginners don't fail due to lack of effort. They fail because they start blind. They hear, invest in stocks, buy real estate, start a business, use leverage, think long-term. But no one answers the real question. Where do I start, step by step, if I'm starting from scratch? And what if you're starting late? What if you don't earn much? What if you made money mistakes already? Today, I'm giving you the complete beginner's investing roadmap, the exact order of moves that builds real wealth. By the end of this video, you'll know what to do first, what to avoid, when to scale, and how to connect everything we've discussed in this series. And here's the most important part. This roadmap works whether you start with $100 or $10,000. Let's begin where all real wealth begins. Step 1. Build the foundation. Before investing, you must survive. Not emotionally, financially. There's a story about two friends. Both started investing at the same time. One invested aggressively without savings. The other built a 6-month emergency fund first. 3 months later, a crisis hit. Guess who sold their investments at a loss? Guess who stayed calm and kept compounding? Most beginners don't fail because of bad investments. They fail because of bad positioning. Your first step: eliminate toxic high-interest debt. Build 3 to 6 months emergency savings. Stabilize income. It's not sexy, but neither is going broke. Let me ask you, if your income stopped tomorrow, how long would you survive? That answer determines whether you're ready to invest. Step 2. Master your cash flow. Wealth isn't built from income. It's built from surplus. If you earn $3,000 and spend $3,000, you're broke at a higher level. A beginner investor must become a cash flow manager first. Track income, expenses, a savings rate. Here's a powerful shift. Instead of asking, "How much do I make?" start asking, "How much do I keep?" If you can raise your savings rate from 10% to 30%, you just tripled your investing power without earning more. And here's the open-ended question. Are you optimizing for lifestyle or freedom? Because those require different decisions. Step 3. Start with simple investing. Now we invest, but not in complexity, in simplicity. Many beginners think investing means picking hot stocks, timing the market, crypto flipping, watching charts daily. That's gambling disguised as ambition. Your first investment layer should be broad market index funds. Why? Because you're not trying to be smarter than the market. You're trying to own the market. Consistency beats brilliance. Imagine two people. One waits to learn everything. The other invests consistently for 10 years. Who wins? Time is your biggest asset. Even if you're starting late, time still matters. The question becomes, are you giving your money time to work? Step 4. Increase your earning power. Here's where most investing advice fails beginners. It ignores income growth. If you only invest small amounts, growth is slow. But if you double your income and maintain your lifestyle, now investing accelerates. So this step is about a skill stacking, a career upgrades, a business exploration, a monetizing expertise. Wealth is built faster when income rises, lifestyle stays stable, investments grow quietly. Ask yourself, what skill, if mastered in 2 years, could double my income? That's an investment too. Step 5. Add cash-flowing assets. Now we layer. This is where things get exciting. Earlier in the series, we discussed investments that can make you a millionaire by 2030. But here's the beginner truth. You don't start with complex assets. You graduate into them. Cash-flowing assets include a rental real estate, a dividend portfolios, a businesses, Digital assets. But only after foundation plus discipline are built. Because leverage without stability is destruction. Let me ask you, are you trying to look rich or become wealthy? One buys liabilities. The other buys cash flow. Step 6. Leverage strategically. This is advanced beginner territory. Debt can accelerate wealth, but only when cash flow covers risk. Reserves protect downside. You understand the asset. Remember our discussion about how the wealthy use debt. They don't use debt to consume. They use debt to acquire assets. There's a massive difference. Here's the filter. If the asset pays you monthly, leverage may make sense. If it costs you monthly, think twice. The question becomes, are you controlling debt, or is debt controlling you? Step 7. Build your investing identity. At this stage, something powerful happens. You stop seeing yourself as someone trying to invest. You become an investor. Identity drives behavior. If you see yourself as a long-term thinker, a disciplined allocator, a wealth builder, your actions align automatically. Wealth is rarely destroyed by lack of strategy. It's destroyed by lack of discipline. So ask yourself, who are you becoming through this process? Because that matters more than the portfolio. Connecting the series. Now here's what most beginners miss. This roadmap connects everything we've discussed. The mindset shifts. The psychology of wealth. A good debt versus bad debt. The millionaire investments. Cash flow strategies. If you haven't watched those yet, go back through this playlist. Each video fills a gap. And gaps cost money. This episode is your hub. From here, you can a deep dive into wealth psychology, learn advanced leverage, to explore millionaire assets, or revisit foundation principles. Binge strategically, build intentionally. Let's conclude. Remember how we started. What if the only difference between you and financial freedom is a roadmap? Now you have one. But here's the real question. Will you execute? Because information changes nothing. Action changes everything. And if you're thinking, but what if I'm starting very late? That's exactly why the previous video matters. Go watch 7 investments that can make you a millionaire by 2030. Then come back. Then build step by step. This isn't about speed. It's about direction. And now, you finally have it.